David, seems like the market has legs, but we are overdue for that correction. So given the fact that the economy is still somewhat stimulated, we haven't tapered all the way off of QE3 of short-term interest rates at 0.25%. Is the growth that we're seeing in the economy real?
Yeah, it's a great question. I mean, we're going to find out real soon. I mean, there's been a lot of good numbers. I mean, unemployment's below 6%. We still have inflation that's a concern. We have pretty low inflation. Oil prices falling generally does not bode well for economies. You usually have stock markets and oil prices rising together, believe it or not, even though it's great for the consumer. But we did, we almost got that 10, Craig, the 10% correction, 9.8%. So we were close, but now it's the second longest in history that we've gone without a 10% correction. And so, I'm not sure if we're over this little blip we've had so far, but it's healthy. I'll tell you, clients are finally getting a little real about their portfolios, which is healthy. We passed a very major anniversary date, the 27th anniversary of Black Monday. Put that in context, that was October 19th, 1987. The market lost 20%, 22% in one day. That'd be like the Dow Jones losing 3,600 points in a day.
Wow.
To put that in perspective. We passed that, fortunately. But, my bigger concern, quite frankly, is next week. Next week is a historic week, and I don't want to, it's not hyperbole. We're talking about the potential end of a 5-year run of quantitative easing. And so the federal governors are going to be meeting with Janet Yellen and deciding if they're going to end tapering. And, the best analogy I can give you for that is it's kind of like taking a heroin addict, taking him off methadone, dropping him in Bangkok, and seeing what happens. We just know it's just going to be wild, right? So all I can tell you is that I have no idea what's going to happen, and that is Wednesday, October 29th. And the bottom line is, you can see in this chart, is the market, every time we've taken away stimulus, which is QE1, QE2, QE3, Operation Twist, all of these stimulus, every time the market did have a pullback and even a correction. So the point is that I don't know what's going to happen. I can tell you that my clients are prepared and protected for this. I hope you are as well. So it's going to be very interesting. I would hold on to your seatbelts. And Wednesday next week will be a very monumental day.
Yeah, they've been tapering, so we've seen it come off a little bit. You mentioned Operation Twist. I mean, there's been so many things thrown at the economy to get it back on track. You had TARP, HARP, HAFA, TALF, Operation Twist. Last week, you and I were talking about a dead cat bounce, and we never came back and explained it. I think we scared some of our viewers with that one. But
the cat lovers?
Yeah, so it's, needless to say, there's a lot of questions that are coming from all of the confusion in this market. And if anybody wants to get some advice, first and foremost, I encourage you to reach out. David has a book, Success-onomics. If you want a copy of his book, you can text us for that. Be happy to get that out to anyone who's viewing today. But also, one of the most important things you can do right now is just see how well your bets are hedged. David offers a second opinion if you want to get a financial review, just to make sure that you're well-balanced, well-diversified, hedged against some of these things. You can visit him online at reyesplan.com. David Reyes, thank you so much for the Reyes Report.